Dear students and working accountants, welcome to my Smart Tally Plan YouTube channel. My name is Babura from Hyderabad. So before entering into our topic today, an advice to you. If you want to learn Tally Plan, GST, TDS, TTS, everything perfectly, gaining expert knowledge and become the expert accountant, please follow all my videos in this channel in the same serial wise order and practice them well. You will get very good knowledge, that is expert knowledge, and you will become expert accountant. And everyone visiting my channel, please don't forget to subscribe the channel and then click the bell icon and select all option. You will get notification for all the videos which I upload in the channel. And watch all the videos. And sorry, you please share my Smart Tally Plan channel with all the persons, with anyone who want to learn all these things, that is Tally Plan, GST, TDS, TCS. Please share with them and watch all the videos till the end. Don't skip in the middle. If you skip in the later part, you will not understand the practical working on the GST, in the Tally Plan relating to the topic. So please watch till the end, and at the end, if the video is good, please like my channel, and in the bottom, in the comment section, please definitely don't forget to post your comment about this video, please. Okay, now we will enter into our subject. I am sharing the screen here. In the last video, so manufacturing accounting we completed. So all the traders, service providers, manufacturers, everything we completed. All these things which we did already, now they are all called, the dealers are called regular dealers. Regular dealers. In the act, they are called as regular taxable persons. We call them as regular dealers. The next type of the registration, registration type. So anybody registering under the GST Act, they are classified into two types. One is regular dealers, that is regular taxable persons. So that's all we completed. And the next one is composition dealers, that is composition taxable persons. That is the composition scheme. It is called regular scheme, composition scheme. So the dealers and persons registering under the composition scheme, they are called as regular, composition taxable persons or composition dealers. Now our topic is, what is composition dealers? Meaning the provisions. So these composition dealers are covered under section 10. Under section 10, and the accounting entries in the Tally Plan. And this also we cannot complete in one video. We will complete it in two parts. We will complete in two parts. Okay. Now we will take the meaning of that. See, all the previously covered all the regular dealers. So they don't have any restrictions regarding the turnover. See, they have to maintain the books of account as per the law. They have to maintain a lot of books of accounts. They have to maintain the stock registers, and every month they have to file two returns called GSTR1 and GSTR3. So for 12 months, 1 year, they have to file 24 returns and one final return. Totally, they have to file 25 returns. All these are relating to the regular dealers. But in the case of small business people, so maintaining all the different types of lot of books of accounts, maintaining stock, and filing returns every month, 2 returns, total 25 returns in a year. All this will be very hard for the small business people. That is why for the small business people, one scheme called as composition scheme is introduced. So the person will be registering under the composition scheme, they are called as composition dealers. For this purpose, that is for the purpose of registering under the composition scheme, one threshold limit for all the people. The threshold limit for registration is 40 lakhs. Above 40 lakhs, they have to register. Similarly, here In this case, the maximum limit of the business, that is maximum business of turnover called maximum threshold limit, is prescribed for the people registering under the composition scheme. So every businessman called dealer with not more than 1.5 crore, 1.5 crore, 1 lakh, 1 crore, 50 lakhs. If their turnover is less than that, then they can register under the composition scheme. So the maximum limit is 1.5 crore is the maximum limit. So up to that limit, the persons can register under the composition scheme. So while registration itself, the registration number, GST number, everything will be same. In the registration form, they will ask you, do you want to register a composition scheme or regular scheme? So if you select composition scheme, you will come under the composition scheme. And here, the limit, maximum limit, I am telling you, the 1.5 crore means, so when you are selling, your sales means turnover. Sales, you may sell taxable goods. You may sell non-taxable goods, means enumerated goods, exempted goods, and all the goods which you sell, whether they are taxable, non-taxable, all the goods, the total turnover is taken for the purpose of the eligibility turnover limit. So all turnover, total turnover not more than 1.5 crore, you are eligible to register under the composition scheme. And see here, these composition dealers, they need not maintain all these books, many books of accounts, they need not maintain the books of accounts, and they need not file all the returns every month, and totally, I mean, lot of returns in a year. Okay, so they can file, they have to file only one statement, not return. One statement every 3 months, that is quarterly, they have to file one statement. It is not a return, so it is a statement. That's why it's called GST, not GSTR. GST CMP 08. CMP means composition. So CMP 08 form, that is the statement, they have to file once in 3 months, that is quarterly, and they have to pay the tax. The tax rate will come. So they have to pay the tax. They have to file once in 3 months, means so yearly they will file only 4 returns. That is the 4 statements. 4 times they will file the statements. We call them as returns. All the people call them as returns, but they are not actual returns, only statement. So 4 statements in a year and 1 annual return. 1 annual return should be filed with them. Totally, they have to file only 4 statements and 1 return. Totally, take it as returns. Totally, only 5 returns you have to file. And the last date for the filing of the return, for other cases, in the regular cases, GSTR 1, 11th of next month, GSTR 3B, 20th of next month. But here in this case of composition dealers, under this scheme, so after the quarter, so 18th of the next month, so after completing April, May, June, so July 18th is the last date for the quarter. And July, August, September, October 18th is the last date for filing the statement and payment of tax. 18th, okay, only one. And like that, they file. So for March quarter, April 18th will be the last date for filing this one. This is a statement. This is a statement. That is why the filing date is called not due date. It is not due date. It is called something like last date or something there. It is called. So within that year, and the annual return is to be filed by 31st of the next month. That is April. April 18th is the last date for filing the CMP 08 for that quarter. For the whole year, total summary, you have to file in the GSTR, which is called as GSTR 4. The annual return is called, it is a return. It is called as GSTR 4. That is to be filed by April 30 of the next, I mean, after completing the year. So April 30, you have to pay. April 18th is the last date for GST CMP 08, and April 30 is the last date for filing the annual return GSTR 4. Okay. And here, the persons, the maximum limit is 1.5 crore. 1.5 crore. But here, there are some restrictions. I mean, restriction in the sense, the eligibility, there are some persons, even though they have less than 1.5 crore, turnover of 1.5 crore, even though the turnover is less than 1.5 crore, some people cannot be registered, cannot opt for the composition scheme. That's one. Number one is persons making, interstate outward supplies. That is, outward supply means sales. Selling interstate means selling in other states. They cannot take the composition scheme. And the persons, some people, some traders, they sell the goods through e-commerce operators. E-commerce operator means Swiggy, Zomato, like this one, Amazon, Flipkart, all they are called as e-commerce operator. They provide a portal, they provide a platform, electronic platform for the people to buy from others through them. They are called as e-commerce operators. If any dealer, any trader, any person selling the goods through the e-commerce operators, they cannot take this composition scheme. Okay, and then there are some people called casual taxable persons. That is, they don't have any regular business. They will do the business sometimes for few days or few months. They do the business, they will close, just like in the exhibitions, in some of the special occasions of opening some shops or stalls, doing business for some time and then closing. They are called as casually they will do business, not regular. Casual taxable persons. So they cannot take the composition scheme. And NRI, non-Indian residents, in non-Indian residents, non-Indian resident, the foreign residents having business in India for some time. That called as non-resident Indians doing business for casually in India. That is, they will be outside only, but sometimes they will come to India, they will do the business for some time. That is called as a non-resident taxable person. Non-resident taxable person, they do business in India for some time and they are closed. They are called as non-resident taxable persons. They are also not eligible to take the registration under this composition scheme. Okay, the main thing is these composition dealers, the persons registering on the composition, they cannot sell in other states. That is, intrastate supplies, they cannot make. Okay, and here, in this case, in the case of normal, what you call regular dealers, regular persons, there are three types: traders, manufacturers, service providers. Here also, the three types are there: traders, manufacturers, service providers. In addition to that, there is one more variety, one more type of dealers in this composition scheme. They are called restaurants. So, in the case of restaurants, but not serving liquor, but restaurants should not serve liquor. Serving liquor, they cannot come under composition scheme. The restaurants not serving liquor, they can register under the composition scheme. So that is another type. So traders, manufacturers, service providers, and restaurants. These four types of people, they can do register under the composition scheme. They can composition scheme. And then some rules relating to the composition dealers are: number one, sales cannot be done. That is, outward supplies cannot be made in other states. That is, intra-states outward supplies are not allowed. Outside the state, they cannot sell. But when purchase, there is no restriction. They can purchase from anywhere in India, that is within their state or within other states. Also, they can purchase. So, for purchasing, there is no restriction. For only sales, only intrastate sales only within the state, not interstate supplies should be made. So this is one restriction. And then when the persons, the composition dealers, when they make the sales, when they are selling within the state also, when they are selling, they cannot collect tax from the customers. They cannot, on the sales, they cannot collect the tax. So they cannot collect GST. So only they have to supply the goods without any tax. Without any tax, they have to supply the goods. That's why when they issue a bill, normally we call it as in tax invoice, because tax also will be included in that. All others regular dealers will issue tax invoice. But in the case of composite dealers, they can issue only bill with the taxable goods or with the taxable value, no tax. That is why the bill is called not tax invoice. It is called as bill of supply. That is only supply of material without tax. So it is called as bill of supply. So they have to issue only bill of issue, say bill of supply. They cannot issue tax invoice because there will be no tax. And then, so bill of issue, bill of supply only they can issue, but in the bill, all the total bill will be the same, like tax invoice, but the heading will be not tax invoice, it is bill of supply. And below that, they have to mention that they are composition dealers, they cannot collect the tax. That will be made known to the customers. That's why below that, the heading bill of supply, they have to mention composition taxable person not eligible to collect the tax on supplies, tax on supplies. So composite or composition taxable person not eligible to collect tax on supplies. That is to be mentioned on the top below the name of below the bill of supply. And the other the total bill will be the same like normal bill. Okay, this is the thing. So they cannot collect. Then while purchasing, so the other person who is the sellers, when they are issuing the invoice, if they are registered person, they will issue the taxable invoice, the tax invoice. That means they will include tax also in the invoice. In such a case, these people, that is taxable persons, they have to pay the money only. Total money they have to pay. That is tax also they are paying, but their tax also they are paying. So on the say purchases, they are paying tax. It is called as input tax. Inward say purchases. Purchase means inward supplies. On the inward supplies, you are paying tax called as input tax. It is called. So when they are paying the tax on purchases, that input tax cannot be claimed. We cannot get back the input tax. That is input tax credit, ITC, cannot be claimed. So we cannot claim ITC since we are not collecting. If you collect that, the ITC will be adjusted and paid to the government. But we are not authorized, we are not eligible to collect tax on sales. That's why when we are paying the money to the, when you are paying money to the sellers, they will pay to the government. But we cannot claim ITC. So what to do when you are paying? In such a case, the tax which we pay the tax to the sellers. But that is to be treated as expenditure, not as duties and taxes. It is not taxes. That is the CGST and SGST tax, which we pay to them, included in the bill. That is created as CGST and SGST or IGST. But it is created not under the group duties and taxes. Previously, we create under duties and taxes. But here, we cannot create under duties and taxes. It used to be created under indirect expenses. And in the same thing, when we are selling the goods and we are paying we cannot collect the tax, isn't it? So when we are buying the goods, the tax paid on the invoices, so we have to pay that, but it can be treated as expenditure and it is to be added to the purchase value. So the goods purchase price will be total value. Invoice value will be the goods value. So it is added to the goods value when you are purchasing. When you are selling, you cannot collect the tax. Then how? In such a case, you cannot collect the tax, but not depending on the tax rate, we have to pay some little percentage to the government from our pocket. We cannot collect from them, but we have to pay from our pocket a small percentage of the tax. So that is also CGST and GST. That is also treated as expenditure. So while purchasing, we pay that. It is treated as expenditure, but is added to the purchase price. When we are selling the goods, we cannot collect the tax and we have to pay from our pocket. That is treated as expenditure. That is why this CGST and SGST will be created under the group, not duties and tax. Under the group, indirect expenses. Indirect expenses. Even though we are paying to the purchase, on the purchase, it is added to the purchases. That is why it is not shown, the amount is not shown in the GST. That is why only the amount which you pay to the government on the sales, we paid from our pocket. That will be shown in the GST and HGST in the profit and loss account as expenses, indirect expenses. And how? In such a case, how the tax is paid? What is the percentage? We have to pay a little percentage, not according to the rates. The goods may be generally, in the case of regular dealers, 8%, 0%, 5%, 12%, 18%, 28%. But we are not bothered about those rates. These composition dealers, they have to pay little percentage. Is it how many? See, there are, I told you 4 types: traders, manufacturers, then service, restaurants and service providers. In such a case, you see here, first of all, first 2 categories, traders and manufacturers. Previously, I'll tell you, traders and manufacturers, they have to pay 1% only, 1% of the sales. Previously, traders 1% and manufacturers, they were 2%, but now it is omitted and added to the traders. So traders and manufacturers, they have to pay 1%. And restaurant is not serving liquor. If they serve liquor, they cannot come under composition days. Bar and restaurant, they will not come. So restaurants not serving liquor, they have to pay 5%. They have to pay 5%. And the third one is the 4th one, that is service providers. Service providers, they have to pay 6%. So traders and manufacturers, 1%. And restaurants not serving liquor, 5%. And service providers, 6%. But there is one more restriction on this service providers. Here, the composition dealers the composition dealers can be registered under composition scheme if the turnover is, the limit is 1.5 crore for the composition dealers. But for service providers, rate is 6% and the limit of the turnover is only 50 lakhs. For all the traders, manufacturers and restaurants, the limit is 1.5 crore, but only for service providers, the limit is only 50 lakhs. So 50, if the above 50 lakhs, he cannot be a composition dealer. And above 1.5 crore, the others, they cannot be under composition dealer. They will become regular dealers. They will become regular taxable persons or regular dealers. Okay, this is how we pay, and this is the tax is calculated. And I told you, when you are calculating the limit, that is the overall limit 1.5 crore and 50 lakhs in the case of service provider. In such case, all the types of goods, taxable goods, non-taxable goods, that is nil rated, exempted, all the goods sales will be taken into account for the purpose of only the limit. And for payment of tax, only trader and manufacturer 1%, and restaurant owner, restaurant 5%, service provider 6%. Rates are okay, but how these rates are calculated means only in the case of traders, the value of they have to pay 1% only on taxable goods only. If you sell non-taxable goods, that is nil rated or exempted goods, we need not pay any tax. Only on taxable goods only, the trader has to pay 1%. And all others, 5% and 6%, they have to pay. That is manufacturers, service providers, restaurants, all these people. All they have to pay the tax, the respective percent, they have to pay on total sales. That is taxable sales, non-taxable sales, that is nil rated, exempted. On all the total sales, they have to pay the respective percentage. Only trader has to pay this 1% on only taxable goods only. Okay. Now, how the composite dealer will maintain the books? I mean, they need not maintain any books, but anyhow, for their purpose, they will write the books of account, isn't it? So how this will be entered in the tally prime, how they will enter. So we will go to this one. See, I created a company already. So company creation, everything same. See, we have to composition accounting. See here, go to this, see alter, see here. So company creation. So now we are already opened. Now we are opening. That's why it's called company alteration. It is actually called company creation. So name of the company and everything, state, complete everything, all the details and the state. So like this, we will complete. Immediately after creation, if it is a old new company, when you create the company, immediately after that, so after that, this window will come. That is, F11 features will come. Company features alteration screen will come after creating that. Company is successfully created and this will be shown. In this case, accounting, maintain accounts, bill of enable bill entry, bill wise entry, yes, okay. Maintain inventory, okay, yes. And integrate accounts with inventory, okay, all these are okay. But in this case, I mean, enable the goods and services tax, enable the goods and services tax, there is a labor. See here, the state, GST registration details, the state, it will be taken automatically by default, whatever the state we have registered in the, when the registration, when you created the company, then what is the state you give? The state will be taken, and after that, but generally what we do, we take as regular all the other cases, and by default it will be regular only. But here we have to take it as composition dealer. So we have to go to composition only. We have to select composition. Immediately it will display message that is actually by default it will be regular. We change it to composition. Since see, we have changed the registration type from regular to composition. We are changing. That is why. Do you want any help? Because to know about composition scheme, it is a new scheme now. So to about the, you know about the composition scheme. Do you want any help? Need help to know what next, what to do next, what is about the composition. If you click yes, so another page will open, all the details regarding the tax and composition scheme will be there. We don't want that. You click no, that's all will go here. Next one is no, next one is here. That is start GST applicable from means in the creation page, what is the date given, books beginning from. In the case of an old company, that will continue. Otherwise, in the middle of the year, if you open the business, start the business, we will give the books beginning from the state of starting of the business. Otherwise, from the beginning. So that we will take automatically. Then GST number will be the same for everyone. So here, this is the number. And then these are the GST registration. That another one. Additional features. Here, what this is the total company features, GST details. These are GST registration details. Now, additional features here. Here, tax rate for taxable turnover. So, for the turnover, what is the tax rate you have to pay? So, what is that? For trader, 1% you have to give. For trader and manufacturer, for restaurant owner, you have to give 5%. For service provider, you have to give 6%. So, we take this trader. So we give 1%. So 1%, the rate, respective rate applicable to us, it will be given. And then how that rate is calculated, I told you already. In the case of trader, only taxable value, that is taxable goods only, will be taken. On that only we have to pay tax. If we sell non-taxable, related or exempted, so we need not pay any tax. But that will be taken as per turnover only. But we need not pay tax. We have to pay only on taxable goods. Suppose if you are not trader, in other cases, the respective percentage, other one is for manufacturer 1%, 5%, 6%, that is calculated on total turnover, that is taxable, exempt, and nil rated goods. We have to pay the tax on all the total turnover. But now we are taking as trader, we take it as taxable value. And after that, I told you already, when they are purchasing, the tax we have to pay to them. If there is tax in the invoice, in the case of registered dealer, the supplier is registered dealer, they will charge tax. So the tax also we will pay to them, but that is taken into account, and the tax is not treated as tax not recoverable from the government. It will be treated as expenditure, and it is to be added to the purchases. That is given here. Enable tax rate for purchase. So these purchases rate, tax rate which you pay, that is to be added to the purchases. So that's given as yes, we will give. Even if you give no also, effect will be the same. Result will be same. That I will tell you later. Okay. So if you give this yes, it will be good. Otherwise, even if you don't give, it give it as no also. Okay. But in the case of another item, purchase and including purchase and reverse charge mechanism, that it is compulsory then. In such a case, if you give yes now, it will be okay. And here generally, all the details, e-way bill, e-invoice, that is not required now. So we will take it as no. So that will be closed. So, and then TDS, now it is not applicable. It's not necessary, not that. So, close. So, this is the what we have to do. See, in this case, company creation, we created, and on that, in the company features, GST applicability, that is composite or regular, and GST rate setup, that is 1%, 5% or something, and the respective goods, that is taxable goods or something. And then GST tax and party ledger creation, party ledger, then stock items creation. So for that, what to do is, we have to go to create button. Here, we will create ledgers for the creditors, for the debtors, purchases, sales, taxes, GST, IGST, all this. So I created already. And then you have to go to inventory masters. Here you have to create all the stock items and you have to give them exempt or this one. So this I already created. That's why I'm going to alter. If you go to alter, you can see all of them. If you want to create new one, you can create. So go here, take ledger. So we have created all this. In this case, first we will create the persons. See here, when you are purchasing, they are called as suppliers. So just we are giving, not giving any name, giving as supplier. Supplier means person supplying to us, means it's a creditor. So for example, so there are the way within the state, registered, unregistered, composite. Composite will be within the state. Other state people, they cannot tell to us. So composition will be only within the state. Registered and unregistered may be within the state, that is intrastate, or maybe from other state. So I created all 5 types. So see, the local registered, local registered, local non-registered. Similarly, the unregistered, non-local, non-local, unregistered. So 2 local and non-local, registered and unregistered, and one is local only composition. So these I created. This within brackets I kept to just to remember, to understand. And then sellers, I mean, when you are selling, we will sell to our customers. Our customers, we have to sell only within the state. So no interstate. So within the state, registered, unregistered, composition. So the other persons, and customers also. And customers, that is consumers also will be there. So consumer means they call as, we just take them as unregistered. URD means unregistered. So these consumers and unregistered businesses, they will be taken as unregistered dealers only. Okay, unregistered. So local registered, local composition, local unregistered, no interstate. This is created. And then we have to create the tax. So CGST. See here I told you CGST, GST, IGST, they will be taken as expenses. They will be added to the purchase value when you purchase. That is, when you are selling, we are not collecting anything from our packet we are paying. So we will enter them as expenses only. When you are paying also, it is expenses to the business. So here is a CGST, take only indirect expenses, then central tax, and the thing we made, that is the purchase value. Yes, we give in the creation page, that is the F11 features. So then automatically this option will come. Appropriate tax value in purchase invoice, the value of the tax amount you add to the appropriate to the tax invoice, that is purchase invoice. So we take it as yes. If you give there, automatically it will be yes here. Otherwise, see here, it will be yes. So there, see F11, if you give it no, suppose if you give it no here, if you give it no, so then this option will not be available here. So you take just, it is better you take as yes. But if it will be the same, I will show you both. So here, you give it as yes. Okay. So if you give it as X and accept, that voucher will be available here. So it will be yes. So like this, CGST, same in the case of IGST also, the same indirect taxes and integrated tax, yes, that's all. And then CGST and then SGST. SGST also, indirect expenses, state tax, and then yes, and this accept. Okay, like the taxes. So what is taxes? Then purchases and sales. Purchases and sales means, in the case of purchases, So it is taxable goods means there will be tax. If it is non-taxable, there will be no tax. So there is no problem. Just we can take as only taxable, exempt. Exempt means nil rated or taxable. Exempt everything untaxable. So only we take only two. That is exempt, taxable. But in the case of sales, in the case of sales account, sales means they may be exempt, taxable sales, exempted sales, nil rated sales. So I created all because on taxable sales only we have to pay the tax. On exempted and nil rated, we need not pay any tax. In the reports also, they will show all the items separately, but they will show the tax only on taxable goods, and for others, they will not show any tax. So that we will see later. Like this, we will create like here. When doing sales account, if the sales exempt means applicable, and you get yes, here nothing they will ask, just exempt. In the case of purchases, then in the sales. So there will not be any tax collection. That's why they will not ask any tax rates here. See, they are not asking any, they are not giving any tax rates, just exempt or taxable. Taxable means you have to pay 1%. Taxable means you need not pay anything. That is why then select goods, accept. Similarly, nil rated, same thing. Yes, you take as nil rated goods. That's all. And exempt, then taxable. So in this case, taxable sales, he will take, and then we will take it as taxable. For sales, we are giving here itself. Okay. Then, right? We are not giving you rate here. But for purchasing, we have to give the rate for the tax item. I mean, stock items, we have to give the rate in the stock item for purchases, because for purchases, we have to give, for purchases, here, we are not making guess. We give the rate because rate is not giving. So we make it as, rate will be given in the stock items creation. Okay. And then ledgers over. Then come to the stock item. Then I created goods. We'll create the name of the goods. Goods taxable, goods exempt, goods nil rated. When you are selling, when you are purchasing, whether it is tax is there, we'll put the tax. Otherwise, we will not put. But when you are selling, we have to pay tax on that 1%. For that purpose, taxable, exempt, nil rated, I created separately, because on taxable only we have to pay, on exempt and nil rated, we have to show separately. It will be shown in the report, and no tax will be there. So like this, I created, you see, taxable, here numbers, then applicable, then yes, here number, taxable, and the rate, and accept, goods and accept, and then exempt. So everything will be the same, applicable, yes, here will give the number, and here exempt. So exempt, so it's no tax rate, goods, accept. Then nil rated, that's the same, nil rated, pages, units, applicable, yes, you will give the number, give the nil rated, that also there will be no tax. Okay, like this, the example I have given the number. For example, I give something. Yes. Okay. So like this, we have to create. Okay, all are created. Now we will go to the entries. So now, in this part, we will take up only purchases, sales, and the reports. Reports also, only the sales will be shown in the reports. So, because we have to pay tax only on the sales, that is why there is no ITC from the purchases. That's why only sales will be shown in the report, and how the report will be shown, and how to pay the tax, and all this we will see in the second part. Now we will take up first of all purchases. Take first June. Okay, for example, 1st June we will take, so number, invoice number. Okay, then now we will take our purchasing means suppliers. We will take the suppliers. Registered means we will get the tax. Unregistered means or composition local, or unregistered means we will not have any tax. So first I am taking this local registered. So local registered number, and purchases. Purchases maybe he may be registered or non-registered, but tax goods may be, but taxable or non-taxable. I will take a taxable, and here it will ask you, because For purchases, there we are not giving anything. That is why here we have to give taxable. So get the space bar, click the space bar, the list will come, or click just taxable means just click T, so attributable will be selected, and then goods. Goods when I'm taking taxable because purchase is taxable. So goods taxable, one item, so 20,000 we will take. And then we are taking yes, means we do the tax separately, but it will be added to the purchases. So here, CGST, HGST is added. So even though we put separately the CGST, HGST, the amount will not be shown in CGST and HGST account because they are not created as duties and taxes. They are created under indirect taxes. So in this account, tax accounts, amount will not be shown. It will be added to the purchases account. So total amount will be added to the purchases. See here, now we will go to the ledger. See DAL, see purchases, purchase taxable you have taken. So purchases taxable, see total amount 23,600 rupees is added to the purchases. And go to the CGST or HGST. See, the GST there is no amount. Or similarly, CGST also. So amount is not posted to CGST tax account. It is posted to the purchases account only directly. Okay, now next one again another purchases will take up. The another purchases will take up. Here we will take up supplier local registered. Now we will take a registered non-local. Non-local registered we will take up, and here also we will take up goods taxable, and here T taxable, and the goods we will take up now. Good purchase taxable with taxable we will take up 120,000. So again here, see purchases taxable registered non-local. So see here CGST do not calculate because it is the supplier is non-local. So we have to take IGST. So IGST are taken and accepted. So here now if you go to the see the IGST, DAL, IGST, no amount is there. So purchases, if you go, purchase taxable. So both the amounts are available with tax. Okay. Now we'll take up another one. Same thing like this. We'll take up another one. Whether it may be supplier composition means within local. Composition means whether it is taxable, non-taxable, whatever it may be, he cannot levy the tax. So we will take up taxable, that is supplier tax, and purchases. For example, you take up purchase taxable also. Taxable purchases, it is taxable only. Purchase means taxable. Taxable. So here, goods taxable, one unit. Suppose you take 15,000. Okay, here we go. Here, in the case of taxable person, they will charge the tax. We have entered the tax. But here is a composition dealer. He cannot take tax. So there will be no tax in them. Even if you try to do the tax, CGST is local only, but CGST is not calculating. Okay, that is why the person, whether it is goods is taxable, the person selling is a composite dealer. He cannot give you the tax. So this is. And if you take up another one, supplier, non-local, unregistered, whatever it may be. Non-local, unregistered, or local, unregistered. Local URD. Local URD means whether it is taxable or exempted, you will take up taxable. Taxable if you take taxable. So here goods, taxable goods, 1 unit, 15,000. So here also it is taxable, but unregistered dealer. So we cannot, they cannot charge the tax. That is why there will be no tax. Okay. So in the case of another one we will take up, another take up will take up supplier local registered. Local registered. Even in this case, the goods are not taxable, exempt goods. So automatically is coming exempt. So if we're taking goods exempt, you have to take because purchase exempt. So goods exempt you have to take. So goods exempt one item, 15,000. So here it is exempted goods. There will be no tax. Even in local, even if we take CGST, it will not calculate. So this is how we have to enter the purchase. So if we enter the purchase like that, in all these cases, DAL, CGST, we go no amount is in the for all the purchases, no amount in the tax account, and the purchase also exempt simply only value without tax. And if you take purchases, taxable. See, in this case, in these two cases, they are exempt. Local composition dealer, so he cannot levy tax. Here, unregistered dealer, he can levy he cannot levy the tax, only taxable value, no tax. But in this case, these two persons are registered persons, and the goods are also taxable goods. In these cases, two cases, composite or unregistered, taxable or non-taxable or nil rated, they cannot levy the tax. And in these two cases, where if they are taxable goods, they will levy the tax. Non-taxable and exempted, they cannot levy the tax. So that if tax is levied, you enter in the invoice, and here it will be. So here, I will do one thing. Here, we will go to voucher. Now we will enter another one. Before that, we go to this, not for F11. F11, we go. If you go here, even if you take no, even if you put is no here, put is no. Now we will take up purchase, what you call registered local. Okay, local registered person. So in this case, purchases, what is it? What is there now? Purchase local, DAL. Purchase, so here, DAL. Okay, voucher we will take up 22, purchases, registered person, local registered person. He is a local registered person. He will put the tax. So, but tax goods taxable. So we are taking taxable goods 1 unit 25,000 for example here. See here, in this case also, see it is not taken as yes here. So in this case, goods taxable. Okay, here. In this case also, we can give local means CGST, HGST. CGST, HGST are giving. So we are not given it as we have given it no. So add to the sales value, we are not given. We have given no. Even then, this will be added to the DAL purchases taxable. So here it is added to the purchases. Added to total amount, it is added to the purchases. Total amount 29,500, and it is not added to the CGST local. It is not added to the CGST. So in the tax account, it is not collected. So even if we yes or no, that will be added to the purchase because it is a composition accounting. It will be added to the purchases. But if we take it as it is useful for the reverse charge mechanism, that's why better to give yes or if you know also, no problem. This is how then we will maintain the accounts. And if we go to the reports, see in the balance sheet, we go to profit and loss account. See here, take exempted goods and taxable goods. The total amount is added including tax. In the CGST and there is given as indirect expense, indirect, and no amount is in the tax accounts. And if you go to the display more reports and GST reports, see, they will show only GST GMP 08, and this is annual return, but here it is not useful, only after the year, and we take up this only. So here, see, here, April to June. What is the, okay, what is the, you go to day book, what is the date? Only up to June, okay. 1st June only you have taken, okay. So, display more reports and GMP 08. So, first is quarterly. So, GMP 08 is quarterly. That's why directly it is showing 1st April to 30 June. So, in this case, we have made already 6 entries. So, 6 vouchers we have done, but included in the return, but no direct implication on it in return tables. In these tables, there is no implication of the 6 because they are purchases. Purchase will not be shown, only sales will be shown here. And in the case of this one also, only the same thing 6. They are not relevant to this return 6. Purchase are not relevant. Only sales will be shown in both these cases. Purchase will not be shown. But when you are filing annual return, after the year, in the GSTR 4 for 1 year. In that case, manually we have to enter what are the total sales during the year. Purchases, the CMP 08 we are filing every quarter. So the total amount for all the 4 quarters will automatically, they will be drafted. That is called automatically, they will be shown in the CMC 04, GSTR 4 annual return. The total amount will be shown auto-populated. Automatically it will go there. We cannot change anything there. That will be disabled. Only amount will be shown. So the totally, it will be auto-populated from GST 08, CMP 08. It will be auto-populated to the GSTR 4, and all other purchases we have to do. Purchase from registered dealers, purchase from unregistered dealers, purchase relating to purchase under reverse charge. All this will be shown manually. So when you are filing the GSTR 4 after 1 year, but in the case of every month, every quarter in the CMP 08, we file only sales only, turnover, and on the turnover, what is the tax payable? Tax payable on only taxable goods or other goods will be shown, everything will be shown, total turnover will be shown, but tax will be calculated only on the taxable goods only. Okay, and tomorrow we will take up in the next video all the things relating to the sales, how to make the entries, how they are shown in the GST report CMP 08, how they are shown, how the tax is shown, and how the tax is paid. Every quarter, you have to file the statement and you have to pay the tax. So how the tax is paid, everything will be shown. When you pay the tax, the CGST and CGST will be paid. That will be shown in the profit and loss account as indirect expenses. How it will show, that we will take up tomorrow. So with this, today our topic is closed, and I wish all you get textbook expert knowledge and become expert accountants, and best of luck and all the best to all of you. Thank you, and we will meet in the next video. Bye.